Are you one of those people that has a lot of money inside their checkings account and are too afraid to invest? Are you tired of seeing everyone around you getting wealthy off the stock market but you're left behind? Or are you looking at the inflation rate and thinking, geez, how much money will my money be worth 30 years down the line if I did nothing? Well, in this video, I'm going to try my best to get you off your feet to start investing in the stock market. Hey guys, it's Eric here. Before we begin, please remember to subscribe and smash the like button for YouTube algorithm for more content regarding financial planning, financial investing, job search, as well as financial comedy. Now lately, I've been hearing a lot of this from the people around me. Yeah, Eric, you know what? I don't want to invest in the stock market right now because it's too risky. I'd rather just put the money inside the bank, you know? Well, here's my counter argument to that. You are literally losing money by putting money into the bank since you're losing money due to inflation, and the interest rate at the bank is usually very little or none. And as you know, money makes more money, and you need to put money to work. The sooner, the better. That being said, it's never too late to start investing. However, just remember to put a set amount of money aside for your emergency fund. Everything else should be invested in one way or another. The emergency fund for everybody will be different. For me, it's about 6 months. For me, 6 months of emergency fund is about $20,000, which I put into my savings account. Most savings accounts have money that is very accessible, so whenever there's an emergency that requires the money, you can take it out as soon as possible. And on top of that, you generate a little bit of interest. So, as a beginner, what should you invest in? As a new investor, it can be pretty overwhelming when you think about the stock market. I mean, just look at this. When you open up a brokerage app, you're immediately shown ticker symbols of many different stocks. Which one should you invest in? I always preach diversity, so when a single company goes bankrupt, you only lose a small portion of your portfolio. So that being said, the best choice for beginner investors will be ETFs. And if you're interested, please remember to check out my previous video which talks about the difference between ETFs and mutual funds. So whether you have $50 or $50,000, or even $5 million, doesn't matter. Investing in an index ETF will give you a good return on investment while being relatively safe. Now, there are many index ETFs out there, so which one should you choose? Here in North America, there's actually 4 different indexes that tracks different types of markets. I mean, there's actually a lot of indexes, there's actually thousands of them in North America, but we're just going to talk about the main 4. Here in Canada, we have the TSX index. In the US, we have Dow Jones, S&P 500, and NASDAQ index. In general, the S&P 500 is basically the main index in which most investors base the market on. So for beginners, I would suggest purchasing an ETF that tracks the S&P 500, or a combination of 4 ETFs which tracks the 4 most widely used indexes in North America, which I just mentioned. Since there are many ETFs out there from different companies that tracks the same index, the only determining factor on whether you should buy this ETF over another ETF that tracks the same index is the MER, or the Management Expense Ratio. You should be investing in an ETF with the lowest MER fee possible. So for example, if you want to invest in the S&P 500 in Canada, we have the ETF ZSP with the expense ratio of only 0.08%. In the US, you have IVV, VOO, SPLG, all with the expense ratio of only 0.03% that tracks the S&P 500. So if you want to invest your entire portfolio into an S&P 500 ETF, well, congratulations, you have a very diversified portfolio because you are literally owning 500 of the largest companies in the US. History shows that on average, the S&P 500 generates about a 10% return on investment per year in the long run. So just by investing in the ETF that tracks the S&P 500, you are literally doing much better than most of the people in North America. So if that's what you want to do, it's a completely viable strategy. Just buy the ETF and leave it there for the long run. That being said, I personally like to diversify my portfolio even more by buying 4 ETFs that tracks the 4 major indexes in the North American market. Here is a list of the ETFs I have in my portfolio that tracks different markets. Their MER ratio and the US equivalent of the funds are also listed. Now, what you saw just then represents a huge portion of my portfolio. The North American market has a history of being very strong and very stable. And with a history of these 4 indexes providing great return on investment, putting my money into these 4 ETFs is a no-brainer for me. In a future video, I plan to discuss the differences between the 4 most tracked indexes in North America, which I introduced in this video. But a general overview, the TSX index tracks the Canadian market, the S&P 500 tracks the 500 largest publicly traded companies in the US. Dow Jones tracks the performance of the 30 largest companies listed in the US market, while the Nasdaq index tracks the 100 largest non-financial firms listed on the Nasdaq stock exchange, which is mostly tech stocks, so that's why people say that the Nasdaq index tracks the tech performance in the market. Again, this will be for another video which I will do in the future, but by owning 4 ETF that tracks the 4 largest indexes in North America, I am basically indirectly owning about 750 of the largest companies in North America. So in an unlikely situation when a blue chip stock goes bankrupt, which it will, just look at these examples, I'm only losing a very small portion of my portfolio. And that loss really wouldn't affect me at all. I probably wouldn't even notice it. Anyways, thank you all so much for watching this video. Please remember to subscribe and smash the like button for YouTube algorithm for more content regarding financial planning, financial investing, job search, as well as financial comedy. And with that, thank you all, I'll see you next time.